Good morning. Hello, this is Tim Nurse from Making Sense International. Thank you for joining today's webinar. We have participants joining us from around the world, 184 people joining from 40 countries. As you know, meeting the needs of the global youth population requires evidence-based, scalable, and sustainable initiatives. In response, Making Sense International offers a demand-driven knowledge management platform that builds the capacity of stakeholders worldwide to design, implement, and evaluate high-impact programs, policies, and partnerships. This webinar forms part of the Apply It webinar series. It provides the global youth development community with a convenient opportunity to learn from other organizations about concrete tools and knowledge that they can apply to their work. Webinar participants, thank you for joining us for today's discussion on youth-inclusive finance and conflict contexts. Thank you also to our partners at Comonix for helping to develop this webinar and to our speakers for sharing your expertise. Webinar participants, we welcome your questions and contributions throughout this virtual learning event. Please write them into the chat box that's located at the lower left-hand corner of your screen. We also welcome your tweeting and Facebook posts on key points you take away from this event using the hashtag #YouthEO. Our speakers for today's event are Arelis Gomez. Arelis is a microfinance expert with more than 25 years of experience promoting financial inclusion. She's held numerous overseas consulting assignments and worked with international including the IDC and the UN IFAD. Their speakers, please. Thank you. As Chief of Party of the USAID Colombia Rural Finance Initiative, she leads the project's mission to expand access to finance as a response to decades of internal conflict and inequalities in Colombia's rural regions. Our second speaker is Omaid Dekati Rahimi. Omaid Rahimi is a financial sector professional with over 10 years of experience working in microfinance, MSMEs, Islamic finance, insurance, and agro-lending. For the past 3.5 years, Mr. Rahimi has supported USAID's Financial Access for Investing in the Development of Afghanistan, FIDA, project in various positions and recently as the Banking Capacity Team Leader. In this position, he has led efforts to provide leadership and direction to FIDA's banking capacity component, which has resulted in enhanced and strengthened financial sector support to institutions in Afghanistan, including the Afghanistan Microfinance Association, the Afghanistan Insurance Personnel Association, and the Afghanistan Institute for Banking and Finance. Before we turn to the presenters, I'd like to briefly introduce some principles for developing and delivering youth-inclusive financial services that can serve as a reference point for today's presenters. These principles were developed by Making Sense in consultation with over 20 leading inclusive finance providers. They are, number one, establish institutional readiness. Practice has shown that successful youth-inclusive providers are institutions that are not serving youth for CSR, corporate social responsibility reasons, but instead have developed a strong business case for serving youth and are ready to make the financial and organizational investments to develop and deliver services over the long term. Accordingly, the first and perhaps most important step is to ensure that partner financial institutions have the motivation and resources to serve this market successfully. The second one is involve youth in market research and product development. Including youth in market research helps institutions to move beyond their preconceptions of youth and their riskiness and to hear from clients themselves about their demand for financial services and any support necessary to fulfill it. Number three is develop products and services that reflect the diversity of youth. Youth are a heterogeneous group. Successful providers segment the market. They find the cohorts that are appropriate for services and they target their lending or savings products to them. Ensure that youth have safe and supportive spaces. Many youth segments may be accessing formal finance for the first time. Thus, creating supportive spaces is important to attracting and retaining them. Provide or link youth to complementary non-financial services. While some youth need little support to access finance, others do, making supportive services an important complement to finance. Focus on core competencies. Though important, financial institutions are generally not well placed to provide supportive services themselves. Thus, partnerships with youth-serving organizations, business associations, or other capacity builders can be important to serve youth markets. And finally, involve community. Considering that many youth segments are vulnerable, involving parents in the community can be an important strategy for accessing youth effectively and providing them with additional support. These principles were developed for general context, so today we'll hear from our speakers how these general best practices are the same or different in times of conflict. So let's start with Aurelis from Colombia. So Aurelis, I'll turn it over to you to tell us about your program in Colombia.
Hello, everyone. Hello.
You're all set. Go ahead.
Thank you. Thank you for the invitation. Hello, everyone. Let's talk about financial services in Colombia. Colombia is a very well-developed country in terms of financial services, especially microfinance services. In terms of the population, it's a middle income. It's the third largest economy in Latin America, and a population of almost 50 million. And the youth ages is 5 to 24. They comprise 18% of the population. It's a sophisticated financial system. It's a very sophisticated financial system. However, youth still is not fully, does not reach rural sector, and we have limited access to finance, and that constrains rural productivity. In the urban sector, in other words, the urban sector is very sophisticated in terms of financial services. It's almost reaching near saturation, but rural sector is definitely in absence of rural financial services. It's a post-conflict transition. We just signed the peace agreement, but it has been decades of conflict with paramilitary groups, particularly FARC, and prolonged socioeconomic stability. Yes, fine. This is fine. Let's talk about the USAID Colombia Rural Financial Initiative. It's a 5-year USAID funded program designed to improve rural financial intermediation in Colombia with specific focus on the following components: improve rural financial intermediation, reduce barriers to rural financial services, modernize financial environment, learning, knowledge management, and communication. It's currently the first year of operation. Actually, we're only 8 months old, and it's a program that is based on risk management as opposed to risk avoidance. It's a very important difference. We work again with all the financial services are based on risk management as opposed to risk avoidance, focusing on incorporating youth into the mainstream by reducing access barriers. We don't promote many programs. We have some programs that address the needs of youth, but in general, we address the needs in the mainstream.
Great. Well, thank you for that introduction to Colombia. And we'll now move over to Omar, who will tell us a little bit about Afghanistan, and then we'll hear more about the youth inclusive finance components. So, Omar, over to you.
Thank you, Tim, for introduction, and thank you, everybody, for joining us here. Afghanistan, officially the Islamic Republic of Afghanistan, is a landlocked country located within South Asia and Central Asia. Based on the Central Intelligence Agency 2015 estimate, it has a population of around 32.5 million people, that making it the 41st most populous country in the world. Financial services for youth are essential in Afghanistan because 64% of the 32.5 million population are under age of 25. Those between 15 and 24 years of age are making 20% of the population in Afghanistan. Afghanistan has a very young financial sector that has been growing rapidly post-Taliban, especially with the support from international community and donor agencies. Unfortunately, Afghanistan, having been in conflict for decades and still continues to face security threats coupled with weak governance and corruption, that making it one of the poorest countries in Afghanistan. People in Afghanistan are not certain about the future, especially in conflict areas, and they are not interested in saving their hard-earned money with financial institutions. And because of that, financial institutions, particularly microfinance and cooperatives in Afghanistan, they are struggling in mobilizing savings from the community. And that's why they have to provide 100% external finance. Additionally, lack of infrastructure and security in Afghanistan making it difficult for the staff of financial institutions to travel around the villages and understand the financial needs of the underserved markets, specifically, particularly youth. The USAID's financial access for investing in the development of Afghanistan project, also known as FIDA, helps the Afghan government and the private sector to develop a robust financial sector capable of providing financial services, as well as to develop a financial legal framework and market infrastructure that will foster economic growth and generate employment opportunities. The $108 million project began in February 2011, and it's scheduled to end by August 2016. But we might be receiving an extension to February 2017. FIDA works and FIDA has 5 components, and under its enterprise component, it provides tailored financial solutions by creating access to capital and links lenders to businesses who are in need of financing. Under its banking capacity, it builds the human organization capacity of Afghanistan financial sector. We are also working with banks. Under regulatory component, it creates environment for lending institutions as well as borrowers. And also, under regulatory component, FIDA develops new or update laws for financial sector and key institutions. Under its better than cash component, FIDA provides technical assistance to Afghanistan mobile network operators to introduce new and innovative products and services to expand the use of mobile money. Under its gender mainstreaming unit, which is a cross-cutting component, FIDA ensures that women are integrated into Afghanistan financial sector and have access to financial services. FIDA has been working with a number of financial sector industries, including Afghanistan Microfinance Association, Afghanistan Banks Association, Afghanistan Insurance Association, and Afghanistan Banking and Finance industry. Recently, FIDA has been supporting Afghanistan Microfinance Association in organizing youth access to finance workshop across in Afghanistan, and also provided technical assistance in developing and designing youth loan products. As of March 2016, FIDA has provided 52.5 million in private sector loans to over 5,000 businesses Out of which 3.2 million were to female-owned businesses. That has resulted in creation of 5,000 jobs and benefited over 75,000 families.
Great. Well, Omid, thank you for that intro to the FIDA program and what's happening in Afghanistan. I think we have two very different situations today. As you see in Colombia, it's a developed financial sector, and the point is really on risk mitigation, pushing the financial sector to start to include new populations. In Afghanistan, we're beginning almost afresh with a nascent financial sector doing some of the basic regulatory and strengthening work, and then seeing if youth can be included in that initial project. So two very different cases. Now let's go into a little bit more detail on each one in terms of what they're finding are the opportunities and constraints for serving youth. Back to you, Aurelis.
Thank you. Let's talk about the challenges in Colombia first. Lacking access, youth encounter difficulties in meeting collateral requirements. Youth inability to provide collateral is even more difficult in rural areas, where most commercial banks require land as a collateral. The opportunities. Youth have a high demand for financial services due to high unemployment rates. In Colombia, the unemployment rates are among the youth range between 20 and 30%. Growing interest in youth finance among microfinance institutions as a result of client near saturation and over-indebtedness in the urban sector. Youth is more receptive to innovative financial services, including microfinance services. Talking about ARPI experience, the program, the ARPI is in the process of launching the Challenge Grant Fund for Innovation, promoting innovative financial services products and improving access to undeserved population, including youth.
Okay, well that's it's interesting. I think what's particularly we're looking at is it seems like the business case is starting to emerge in Colombia, where it's a saturated market, and so banks are looking at youth potentially as one that they can begin to serve. How about in Afghanistan? What are kind of the challenges and opportunities over there in terms of serving youth?
Thank you, Tim. Yeah, unfortunately, with all that conflicts, there are challenges in Afghanistan and also opportunities. I will start with the challenges. Unfortunately, access to finance in Afghanistan is often perceived as one of the biggest obstacles for younger people here in Afghanistan, who are compared to old age groups, have no or less saving and resources. And they lack securities in the form of land and property that can be used as collateral for debt financing. They lack business experience, and due to strong social tradition, many youth cannot provide financial services to women members, especially in rural areas. I think someone was also questioning here that is Afghanistan is an Islamic country, and is this tradition not affecting youth financing? Sure, it's affecting, as I say, due to strong traditions here. Male youth cannot provide financial services to women members, especially in rural areas and in conflict areas. Youth lack networking opportunities, and there is a high percentage of electricity and unemployment rate in Afghanistan, and brain drain from university graduates due to conflict and lack of opportunities. Mostly youths are they are immigrating both legally and illegally to Western countries and Europe, unfortunately, and this is an issue. But also, luckily, there are opportunities. There is high demand for youth financial services. most young people in Afghanistan have a mobile phone, and their uptake on use of technology is quicker. Youth can become agents for mobile banking that would provide them employment within the village. And this is a very good opportunity for youth, especially for female in Afghanistan who are not that much able to travel outside of the village and their homes. Mobility of the youth from one place to another place is easier. They don't have family burden, especially unmarried male, and they can attend training programs on how to provide financial services. Also, Afghan government created the Deputy Ministry of Youth Affairs under the Ministry of Information and Culture to provide youth-oriented training, entrepreneurship programs, and networking opportunities. In order to overcome challenges, FIDA has introduced microfinance institutions to entrepreneurship and technical vocational education and training centers, and also train microfinance institution on how to develop youth loan products, particularly with a focus on branding and startup loans for youth that are graduated from the entrepreneurship and technical vocation education and training centers. FIDA has been doing this through organizing youth access to finance events across Afghanistan.
Great, Omid, thank you for that. And we'll get into what are some of your lessons learned in a moment. There was a question from one of the participants just in terms of looking at Islamic finance in Afghanistan. You could just briefly note what the situation is in terms of whether it's conventional or Islamic finance, and if that's been a challenge for youth adoption of financial services. Why don't we come back to that? Maybe Omed's got a slight issue with his mic. So let's move on in terms of looking into what are some of the lessons learned. And I'd ask the presenters to reflect upon some of the principles we put up front in terms of choosing the right institution, and then the design and delivery best practices that were put out there. And we'll go back to Aurelis, looking at this risk mitigation approach that you're following in Colombia. How have you been able to try to reduce some of the barriers to educate financial institutions to build the capacity of young people to be included in financial services?
Working with financial institutions in Colombia has been a very good experience in terms of providing access to youth. The most important thing is that market forces are driving institutions, microfinance institutions in particular, to serve youth. And for instance here, the age has been dropped, the age eligibility criteria has been dropped from 25 in the past to 18 years old. That has definitely opened the market to youth in particular, and particularly in rural areas. Let's talk about a little bit some of the characteristics of the economy. What motivates financial institutions, as I said before, is the market forces, driven by the need to expand the client base. That's very important because all the institutions are now trying to what we call massification, expansion. That's a very spread out strategy, and that is driving the economy and is driving the incorporation of youth in the market. The second is providing credit to startups. Some institutions are working also in providing startup programs to include youth into the mainstream. That is being more or less successful, but it's also getting an expansion among all the institutions. What worries financial institutions? Colombian insurance company statistics says that the group 18 to 35 is the riskiest borrower. And Chamber of Commerce statistics say the startups in Colombia has a 60% chance of failure in the first month of operation. A 37% chance during month 13 to 24. Those are very compelling statistics. But again, in Colombia, we are working now towards risk avoidance, not risk management and not risk avoidance. But those are the riskiest statistics that we have in the market about youth participation in microfinance services.
One question I have in terms of statistics from the Colombian insurance company, did it say why this age was the risk?
The insurance companies or the Chamber of Commerce? What statistics?
Sorry, the Colombian insurance company.
No, they said that there are several reasons. They don't explain why, but the institutions, we have been studying the situation over the past years. You have youth that have very young organizations, very young enterprises. That's one major risk, because then, in addition to the age risk, you have the enterprise risk for being too young too. Risk is something that, with the youth in particular, we think the youth being single, living most of the time with their parents, they have most of the expenses covered, and they take more risk in terms of the enterprises, and they have most inexperience. So the fact that we have inexperience with having a low they don't have many expenses because they build the families, and on top of that, the enterprises are very young. But all of this combined do not help institutions to see youth as a real market until now. Again, market forces, because the market is real in the urban sector. It's near saturation. They now are open to see the youth as a potential market. But nonetheless, there are risks that are very latent, and they are statistically proven.
Great, thank you.
Talk about the experience with the program. Providing non-financial services, such as traditional as a technical assistance and training, we consider is key to reducing the risk associated to youth, particularly in what refers to startup programs. We realize that startup programs that have high content of technical assistance pre and post opening the enterprise have more chances of success than otherwise. For instance, the prosperity rates are more or less 7%, 7 to 8%, as opposed to 70% that is expected due to failure of the enterprises. That's mainly the experience in Colombia.
Great. Well, thank you. Let's move back to President for a second in terms of what's been your experience so far with institutions and establishing that institutional readiness, making sure that you have the right partners for the right market segment. Omer, are you speaking?
Oh, yes. Thank you, Tim. Actually, yeah, as a microfinance institutions in Afghanistan, as globally and particularly in Afghanistan, they're providing loans to youth between ages of 18 to 35, but they have not branded their products as youth. What motivates financial institutions in Afghanistan is that financial service providers, they're motivated by building their client base, The high percentage of youth population represent a huge potential as they form the wave of new future clients for microfinance. And also addressing youth unemployment as part of their social performance, and also as it is a high priority for the government of Afghanistan. Access to employment for youth is more limited in Afghanistan due to labor market conditions and local customs, particularly for women and girls here. Financial institutions are often hesitant. They're scared to lend to youth because they thought they are of high risk, they lack collateral, and they lack vocational or business training. FIDA has worked in introducing microfinance institutions to business development service organizations that are providing vocational training and entrepreneurial development opportunities. Youth who graduate from these programs are usually more prepared to a business and therefore they're less risky to loan to. FIDA has provided microfinance institutions with training on providing youth loan products, particularly group loans that do not require collateral or involving their parents in order to establish collateral. FIDA assists microfinance institutions with installing e-kiosk machines in order to reduce costs and expand their client base. Recently, FIDA supported through one of the mobile network operator, training 15 female mobile network agents, and they are operating now.
Great, thank you, Ahmed. So, I think what's interesting, we're seeing on both sides that we are looking at the institution and trying to take that risk mitigation approach, taking our relatives' phrase, and by introducing them to other partners that can kind of reduce the risk on the youth side, looking at technology as a way to reduce costs, and exposing them to good examples and getting over some of those biases in terms of what their perception is of youth risk. Why don't we look at a little bit more deeper into some of those lessons, and Aurelis, maybe back to you in terms of what are some of the other lessons learned about looking at young people in reference to the principles we put forward, and also there's some questions about digital finance. Is that an opportunity in Colombia to engage young people or to reduce costs?
Opportunity, and again, youth have been getting involved in the provision of financial services for over the past 5 years. It's been increasing their participation, again, as barriers have been reduced. That's an important thing because it's getting, youth are getting involved in the mainstream. We don't have to design so many projects, particularly to address the needs of youth. The needs have been addressed in the mainstream, except for some shadow programs that mainly address youth. In some cases, they don't address youth, but youth are the major participants. And I think that's been important in Colombia. First of all, because in addition to the massification efforts, the most institutions are involved. That increases the number of participants in the project, the youth participant in the project. We don't have to target, so if you look at the numbers, the vast majority of the participants right now in the microfinance programs are from 18 to 35 years of age. But let me read this anyway, and then we go back to some of the important comments about Colombia. We continue providing non-financial services to youth. It's important, in particularly to startup programs. We don't do clinical assistance in most of the microfinance programs, except for the startups again. What we are working on is enhancing the capacity for service delivery on behalf of Colombian financial intermediaries, just to be able to have including the loan officers, to be able to look at youth and not getting nervous about giving them loans. and how to manage the risks associated to youth and other vulnerable population in the country. We also have, as I mentioned before, we've been working on reducing barriers to finance. One is been reducing the client eligibility minimum age to 18 years of age. That happened almost to all the programs, and the one that has all the programs have 21 years of age, but still pretty young. But most of the programs are working with 18 years old. Another important barrier that has been reduced is the business years in operations, the criteria. Now it's been reduced to 6 months. Another in other programs that are more aggressive have been reduced to 3 months. And that's been pretty important also to youth incorporation and other vulnerable population. One that is not mentioned here is collateral. Collateral has been simplified significantly in the country. Most institutions, including banking institutions, do not require what I call commercial collateral. In the case of youth, most of the programs, the only requirement is a guarantor, because youth, most of them do not have, they don't have access. And we work almost in all the programs with guarantors. That could be the easiest collateral that the youth can have to have access to credit. Those 3 requirements, by simplifying them, have been able to open up the programs nationwide to youth and to other women, and general women is also a huge participant of the population, but definitely the youth.
Great. If I can just ask a follow-up question. One goes back to segmentation, and I'm just curious in terms of, you started to talk about on a slide earlier looking at different segments and their riskiness or perceived riskiness, and I wonder in terms of your work today, have you found that certain segments are less or more risky, and if that information helped institutions to move forward? And then a second question is around risk. Being that in rural areas we have still somewhat conflicted here and there. What's been the impact of conflict on the portfolio, and have institutions done anything different to try and serve those areas? And have you seen anything different in terms of the risk profile of young people? And I ask in part in Yemen, Making Sense has been doing some work and has found that young people have actually worked better under conflictual environments than adults because they've been able to change their business quicker. Have you seen any examples like that in your work in Colombia to date?
There is a difference, a very significant difference in the what happened to youth when they're already married, when they have economic, when they have families they have to provide for. We see the major difference, for instance, in the PAR rate, in the repayment rate. It's definitely much better than when the person is 18 years old or married with the children and living with the parents. However, again, as I said, most institutions, by requiring, say, a guarantor, that is almost covered. We don't have high default rates in any age. But when it's a young person, 18 years old or 20 years old, and is married because had a girlfriend, very young girlfriend, and they have already a kid, you see the behavior in the repayment rates totally different. They are very responsible with the payments. They are very responsible with the enterprises, because that depends. They depend on the enterprises for sustainability, for sustaining the families. So the main difference that we see is between youth being married and youth being single. The rest, not so much difference. In terms of rural sector and urban sector, the major difference is that they try to pay the loans and they try to pay they try to help the business grow because there are less opportunities. And because there are less opportunities, there are so few programs in the rural areas willing to give them loans. When they get a loan, they behave really well. They tend to behave really well because they don't want to lose that opportunity.
Okay. So your the major issue you see in the rural areas then is more less opportunities rather than anything related to conflict at this point.
The sector is almost the same. People are used to be better payers in the past when they didn't have competition. When competition comes in, the repayment rates are affected by that. In the rural sector, they become affected by positively. Not many opportunities, so many access to services. When I get that access, I try to keep it and I pay.
Great. So if you can tell us on what one thing we've been talking about is on the segmentation and how in Colombia they're seeing that youth who have families tend to be better clients than youth who are single. And maybe, if you have any comments on that. And then on the collateral side, that's been one of the innovations that has helped open access for young people is by allowing just guarantors relaxing some of the collateral requirements. Are you seeing similar things in Afghanistan?
Yeah, thank you, Tim. Before getting to the experience in Afghanistan, I would like to just answer the question there on that traditional Islamic financing products that a friend was asking there. Yes, actually, this tradition is a challenge here in Afghanistan, and it's not that much easy working in rural areas with microfinance products, but FIDA, under its banking capacity component, is working and supported financial institutions through fielding Islamic finance expert in Afghanistan, and has developed and introduced 25 Islamic finance and conventional loan products that currently financial institutions are offering. So also FIDA helped developing the regulatory law, the guidelines for financial institutions so they can put it forward for the central bank and get the Islamic banking window operating license. I hope this has answered your question. Regarding experience in Afghanistan, MFIs are involving youth in market research and product development. MFIs are just to highlight this again. MFIs are providing loans to youth under their generic loan product, but they are not branded as youth loan products. This is very important. So MFIs in involving youth in market research and development will better understand their needs and will come up with understanding the socio-economic characteristic of the youth, rural versus urban, and they will understand, they will come up with their education level, and also will understand if they have taken a loan already, so what's their loan history and what's their certification with the current loan product. Also, they will understand what youth recommends for financial and non-financial services. And as I mentioned, branding loan product for youth is very much important. In the events organized by FIDA, we identified that youth, they were not aware of financial services at all, and they were thinking that we can never access financial services. Also, as I said, involving youth will help financial institutions in developing appropriate loan and saving products according to youth category, which is very important. For example, someone in rural areas may need agricultural loan. Besides this, linking youth with complementary non-financial services, in Afghanistan, FIDA supported Afghanistan Microfinances Association, and through that they linked youth with business development service organizations who provide business trainings and also with vocational training and education centers. Also, introducing youth to opportunities such as startup loans for those that have completed vocational training and have solid business plan, entrepreneurship or vocational training and business planning. Introduction of startup loan to youth that those have completed vocational training and have a solid business plan.
Great, thank you, Ahmed. Ahmed, one question that's coming from the audience is around the digital finance component of your work in Afghanistan. Can you reflect more in terms of how that might have helped include youth in financial services?
Actually, under it, FIDA has a better than cash component, and under this component, FIDA is supporting mobile network operators in introducing and providing innovative products that will encourage the use of mobile money in Afghanistan. FIDA has recently completed a mobile money campaign across Afghanistan. Also completed training 1,500 women agents in Kabul, and so they can provide services through mobile money. They're agents, and they're located in Kabul and providing mobile money services.
So you see that digital finance or mobile money may be as helpful or more helpful for women's access rather than men?
Well, also for men, actually, FIDA supported a number of microfinancing institutions with installing e-kiosk machines, and with installing these machines, they have better outreach, and they have reduced cost, and youth also can use this, and as I said, youth are much more better in uptake of the technology rather than the older age group here in Afghanistan. So it is very beneficial for both male and female, and it has helped financial institutions as well in reducing costs.
Great. I made a follow-on question as well. A participant talked about market linkages and that being important to ensure that young people are successful. And you'd mentioned some agricultural lending that was appealing to young people. Can you talk about that component and how the complementary market services side may help include young people in financial services?
Well, in terms of market ledge, FIDA's enterprise component is providing tailored financial solutions by creating access to capital and increasing competitiveness. Also, it links lenders to businesses who are in need of financing, for example, agriculture sector in remote areas. FIDA has been organizing sectorial access to finance events, and has facilitated $52.2 million dollars in private sector loans to over 5,000 businesses.
Good. And sorry, and I'm going to have to ask the tough question, which comes from Augustus, one of our participants. Of course, a lot of funding for youth inclusive finance or youth employment projects in conflict areas is linked to insurgency. And so the question is, have you seen any evidence that given a loan or given a job that young people in Afghanistan are less inclined to support the insurgents?
No, likely. No, it has not happened. We haven't any report as such. Yeah, but one thing that insurgents and security threats all in Afghanistan, it's affecting the financial services here, but there wasn't any incident that a youth has received loan and that has and used it for insurgency or such. I hope I've got the question right.
Yeah, it was a tough one, but I think the insurgency has made it more difficult for financial service providers to operate in some of these rural areas. Aurelis, want to go back to you on that market linkage question. Are you also actively encouraging complementary services to young people as part of your overall risk mitigation strategy to improve their business success?
Yes, we do it because in the process of, let's say, teaching, training the loan officers, we help them to realize that every single client has risk involved. There is no such thing as a client risk. So the most important thing is to identify what are the risks associated to each client and then work on that. Try to mitigate those risks instead of avoiding those risks. Because if you avoid risk, you cannot massify, you cannot expand, you can reach a large number. In doing that, one of the examples that we use a lot is the case of youth, because the minute that you see a client that is 18 years of age, you get a little bit nervous. It's a natural thing, but we say it doesn't matter. According to the program, he could be eligible for the loan. Let's work on that. These are his or her risks, and this is the way that you avoid that you mitigate those risks. We do that with every single type of client. Let's say we talk to them about, let's say, if it's a person that is doing research into the economy. He could be 35, 20, 40 years old, but he's people see high risk involved in providing a loan to a person that is has been the guerrilla and now is coming to the economy. It's almost the same situation, but we teach them, each person, each client, it has a risk. Every time that you give a loan, you take some risk. The important thing is to find them and to mitigate them and to work with them, because it's the way to massify. For us, it's important that, and I don't emphasize that enough. It's important that the youth get involved with the mainstream, because that's the way that you reach them in large numbers. That's the way that you make sure that you provide all the services, not only credit, savings, insurance. If you do a special program for them, there is an issue of replicability, there is an issue of cost, and at the end, that's fine, particularly at the beginning, but not if you want to reach youth in large numbers.
Aurelis, if I go back to the last statement, I think it's very interesting, but it broke up a little bit for me and maybe for some of the participants. It seems like you're suggesting that it is helping young people to become more capable to enter into mainstream programs rather than to design specific products for young people. Is that the approach you're taking?
Let's say for startups, we think that it's important that is that you have provided technical assistance. That is, you could have some programs that address the needs of the youth, and in fact, the youth is the largest participant in startup programs. But in terms of giving the loans, you don't need to have, particularly in Colombia at this point, we don't need to have special programs for giving them loans. So the mainstream is important thing. Most of the institution, most of the banks, co-ops, NGOs, they have been involved over the past few years in massification and reaching large numbers. It's important that if you want to change the situation of youth, you reach in large numbers. Helping 100, helping 200 doesn't do anything. But do we do anything helping 200,000, 2 million? And that is done only through the mainstream services. And banks are changing here in Colombia. The solutions are changing, and now you could come into any program, particularly microfinance programs, that are more adequate, more suitable to the needs of youth, women, and vulnerable population. And again, because they're based now on risk management, not risk avoidance, and that's a major thing. Youth are reaching large numbers, and that's the major reason.
Okay, thank you. And there's a follow-on question as well, is in terms of going back to the digital question in Colombia, are you finding that anyone is using digital financial services to develop, say, savings products, and especially those that might be We're working particularly because it's important for the rural sector. The more rural, the more isolated, the more marginal you are, independently if you are young or not, the more you need technology. And right now in Colombia, we are working a lot on that. Now you could open a bank account, and you could be 18 years old, open a bank account, what we call a special bank account that do not require major information, for instance, to get access to it. You could do it through a phone. And of course, because the youth are very savvy in terms of technology, they are the ones that could really take advantage of that, and they are. Okay, great. We're coming close to the end here. I'm going to let Omaid and Aurelis just maybe one or last few comments. Maybe Omaid, back to you. Looking forward, I know the FIDA program is coming to an end. Any last recommendations in terms of for the financial sector in Afghanistan to become more youth inclusive in the future? Things that they should really look out for?
It's as I mentioned before, it's very important. Youth financial service are very important in Afghanistan, since 64% of the Afghanistan population makes youth under age of 25, and they can become future plans for financial institutions. And also, supporting youth through financial services will help them grow their business and also contribute to Afghanistan economy. As well as there was a question asking that if there is any instance that inclusive finance affect insurgencies in Afghanistan, it's less likely that people will support the insurgency if they have access to finance, particularly youth in Afghanistan.
Great, thank you, Ahmed. And Aurelis, back to you. Your program is just starting out. You're just kind of learning about the youth inclusive sector. But any last kind of insights or things you want people to take home who are listening to you today for going forth in Colombia?
Well, we still have some issues with startup programs, and not so much with credit in general, because credit has been somehow been taken care of. But in terms of startups, we have some issues. For instance, the programs, for instance, they start off with providing technical assistance pre and post, but the post-technical assistance lasts about 6 months, no more than that. And the statistics that we have are mostly, the program statistics that we get are mostly for those companies, those enterprises, youth enterprises, that lasts about six months. And we don't have much statistics about what happened after that. Another problem that we have with startups is the issue of replicability. You cannot do it in large numbers. You could reach 200, 300. And out of those that get involved with the program, 60 or 50 get a loan for starting up an enterprise. And out of that, again, we just have numbers about what happened in the first 6 months. We don't know much about what happened after that. But the issue of applicability is one. If we could do it in large numbers and the cost. However, we think they are important. These programs are also important, particularly in rural areas where we don't have so much access to rural financial services.
Okay, thank you. Yes, definitely scale. Yeah, scale is of course a critical issue, and so those complementary non-financial services are hard to offer at scale, and that's going to be one key to overall growth of the inclusive financial sector as well, I think, as you point out. Well, very good. I think thanks to both of you for those contributions. I think we heard a lot about the business case in terms of Colombia is more of a right time for institutions to get involved. Afghanistan is just starting, but some efforts to try and improve the business case, ensure institutional readiness, and then a lot of talk about improving collaterals, looking at complementary services, and then segmentation of the market. So I hope everyone can take those ideas home with them as they're looking at youth inclusive finance in some of these conflicted or difficult environments. Now we look forward to continuing this conversation on youth financial inclusion and youth development in conflict settings with all of you in Washington, D.C. on September 28th to 30th during the 10th anniversary Global Youth Economic Opportunity Summit. To learn more about this event, please visit www.youtheosummit.org. And at Making Sense, we take monitoring and evaluation very seriously, and we try to evaluate how well we do with our learning events, both in terms of content as well as delivery. At this time, we're going to open an evaluation form, which should show up at the pop-up in your browser. It can also be assessed at the link below. So it'll take less than 2 minutes to complete, and we'd very much appreciate you completing this evaluation so we can create the most relevant and interesting event for you in the future. This webinar has been recorded and will be posted on www.youtheconomicopportunities.org. You will receive a link via email. If you found this webinar useful, so will others in your networks. We encourage you to promote this webinar recording to others. Thank you again for your participation. I hope all of you have a wonderful rest of your week.
Thank you for the opportunity.
Thank you, Tim, and thank you everyone for staying.